Did you know that Fannie Mae is cracking down on second home loans? This is a big announcement to the industry, and I wanted to share this with you as soon as possible. So traditionally, when Fannie Mae and Freddie Mac had priced second home financing, they would essentially mimic primary occupant home loans. So there were no adjustments as far as the interest rates go and how someone like you who's buying a vacation property would pay as far as an interest rate goes. So there was a huge advantage to buying vacation properties, especially over the last years as COVID hit. Everybody was flocking to find properties all over the country that could serve as a vacation property. However, over the last several months, and I've experienced this myself, more and more investors are coming out looking to buy property, specifically Airbnbs and other rentals, calling them vacation properties. By the way, if we haven't met before, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Whether you're thinking of purchasing your first home, buying a vacation home, or even building your real estate portfolio, or simply looking to refinance, we've got you covered all across America. You can hit the description below for links to more information on how to get your mortgage right. And don't forget, I drop content every single week. So if you want to learn more about the mortgage industry or the real estate industry, I've got you covered. And you can always subscribe and hit the bell below so you get notified every week when we drop new content. Now, back to Fannie Mae and the increase on second home financing. They recently came out and made an announcement stating that April 1st, they are now increasing the loan level price adjustments that every single lender faces when they price these types of loans. Now, let's take a look at the announcement that they made. So you can see for second home financing on or before April 1st, 2022, here are the loan level pricing adjustments, or in our mortgage lingo, we call it LLPAs. Now, traditionally, when you were buying a vacation home, you could put as little as 10% down. So you can see here, if you were putting 10% down, you would fall into this category. And as a second home, there is now a 4.125% loan level price adjustment that every lender is going to be facing. Now, the way a lender looks at interest rates, we get them at what par pricing is, and then based on every borrower's situation, rates tend to fluctuate. That's why, as some of you have watched my channel, I always tell you it's very, very difficult when you shop around and you're just asking a lender what your rate is, because there's all these adjustments that lenders have to take into account as far as what your interest rate is. They're looking at your credit score. They're looking at your LTV, meaning how much money are you putting down and what is the loan to value as far as your loan situation goes. They're also looking at your occupancy. Is it a primary residence, second home, or investment property? Now, for the sake of this video, we're focusing on second home pricing and how it's going to affect you going forward. They're also looking at where you're purchasing, what's the zip code, what type of property are you buying? Is it a single family home? Is it a duplex, triplex, fourplex, condo, low rise, high rise? All these other factors make up the interest rate. So these are just some of the initial adjustments that every lender looks at when they price out an interest rate. Now, you can see how the adjustments are taking place. The more money you put down, the lower the adjustment gets. Essentially, you can get as low as 1.125%, but you're putting 40% down. Think about that for a second. You could have gone putting 10% down on a vacation home to now, if you want the best pricing, you're almost having to put 40% down to eliminate most of these adjustments just to get a vacation property. Now, the thing to think about is this. Like I mentioned, there's been a lot of clients recently that have called and said, we want to buy a vacation property, and they're essentially renting it out, or they ask the questions of, how many days can I rent this to consider it a vacation home? I can tell you this from my point of view. If you are looking to buy a rental property, don't call it a vacation home. If your true intent is to rent the home out, it's an investment property. Don't try to cut corners just so you can put less money down to buy more property. And I get there's a lot of gurus out there that sell you all these courses on no money down financing, or you can put 3% down and buy an investment property, and you move into the house and house hack, and then you move out and do all these crazy things on social media. But I can tell you this, I've seen even TikTok videos, Instagram videos of real estate agents telling their clients how to buy investment homes by essentially lying to the lender to get the application completed. But let me tell you this, that's called fraud. That's called mortgage fraud. So unless you like the color orange and you want to sit behind bars for lying on a loan application, I would strongly suggest you do the right thing. If you're buying a true rental property, by all means, that's totally fine. We can certainly finance. But if you're buying a rental property and you're trying to get away by putting less money down, it's things like this that happen in the industry where Fannie Mae and Freddie Mac, if they're finding out that more and more people are doing these types of transactions, they're going to increase the cost because one, they want to deter people from taking advantage of loan programs like this, or they just simply want to raise the cost. And in my opinion, I think with as popular as Airbnbs have become over the last several years, and probably more and more people lying on applications to then purchase Airbnbs, and probably Fannie Mae and Freddie Mac have all this data, they probably realize that, look, these people are committing fraud up front, and how else can we slow this down? One, we're going to increase the cost across the board. So now, second home pricing, in my opinion, it's probably going to be similar to investor rates. So they're probably going to be a half to maybe 3/4 of a point higher than what you could have potentially got. And now, instead of buying a home with 10% down, which you still can do, but you're going to pay more for it, you're going to pay a lot more to get into that house versus an investment property, which you're looking at least 20 to 25% down. And in our case here for the second home, to eliminate most of the cost, you're looking at 40% down. So even more money than what it takes to buy an investment home. Guys, I've been doing this for 15 years and I can reassure you, do the right thing when you're buying a house. Don't try to cut corners because I've seen it happen to many of clients. I've even had a few people back in my career even try to pull a quick one over us. And let me tell you, there's a lot of data that every mortgage lender has at their fingertips that can tell you when someone bought a house, who was on the loan, when did that close, what lender did the deal, and all this other data that you may not be privy to, that underwriters look at that type of information. So if you're thinking about buying, do the right thing. If it's a rental, put the money down and just go about it the way you should. I'm an investor myself, and I can tell you I do the exact same thing. Every single house that I bought last year, I put 25% down because it's a true rental. And you know what? Putting more money down, in my opinion, works because I cash flow even more on these properties and I get the return that I'm looking for. But if you need help trying to understand what's the best solution for you, what's the best option, how do you best structure your loan so you avoid getting in trouble with the feds when it comes to your application, that's what we want to do. We want to set you up for success to make sure that you buy the right property and do it the right way. So you can always click the link below to schedule a call, and make sure to check out this playlist here to learn about how to get your mortgage right. And I'll see you on the next video.